Alright, hi everyone. Welcome to today's webinar brought to you by IC Markets Global, where the topic is going to be on Fibonacci Masterclass. Right, just want to make sure you guys can hear me loud and clear and see my screen as well. You should be seeing my screen, IC Markets Global webinar, the front page of my presentation slides, and do take note the live chat box is open as well, so do not hesitate to drop your questions or queries that you may have in this chat box here at any point during today's webinar. Alright, just checking things on my end before we go. Before we start things off. Alright, okay. Yeah, so once again, welcome to today's webinar brought to you by IC Markets. We've got the live chat box open as well, so please do not hesitate to drop your questions in this live chat box, and we'll get things moving by going through the disclaimer. Right, so do take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, do take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Alright, so my name is Ketan Rameshchandra. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Alright, so here's the agenda for today's Fibonacci Masterclass. It might be a little bit intense because you'll be covering all the various Fibonacci levels. So basically we have the Fibonacci retracements, Fibonacci extensions, expansions and projection levels, right? So there's quite a fair bit to cover in today's webinar, but do not worry, we have a few good GIFs and some really good examples to clearly illustrate all these different levels. And also, once again, do not hesitate to drop your questions in the live chat box should there be any queries. Alright, okay. So we'll start off by looking at what is an ideal market structure as well as what is not a non-ideal market structure, and then we'll start off with the basics of Fibonacci, which are the Fibonacci retracement levels. Then we'll look at the Fibonacci extension levels. Sometimes we like to call this here as the Nike tick as well. Then we'll look at Fibonacci expansions. We like to call this the flash, and then we'll look at Fibonacci projections and round up with the confluence. Alright, so we'll take a look at what is an ideal market structure, but before that we're going to look at what are insignificant swings, right? Before we look at what is an ideal market structure, we'll look at what are insignificant swings. So as you can see this GIF here, the orange lines that are highlighting the moves on this particular chart is actually highlighting the insignificant swings, right? So when we use a Fibonacci retracement, or rather when we use the Fibonacci retracement tool and we are trying to draw the starting point and end point, we're actually looking for significant swings, right? We're looking for a significant swing high and a significant swing low. In this example here, this GIF is highlighting the insignificant swings which are wrong. So we should not be using the Fibonacci retracement tool from this swing high here, for example, down to this swing low, right? These are insignificant, and the subsequent retracement levels may not yield much significance. Right now, we are going to be looking for we're going to be looking for significant swings. Apologies for this. Just let me quickly. Right, this should be significant swings, right? Of course. Right, so we are looking for significant swings such as this that's being highlighted in this GIF. So here we can see very clearly where the significant swings are, right? You can see this part where I've circled here, point 1. This is a very significant swing high. Then at point 2 we have a significant swing low. Then at point 3 we have another significant swing high, and at point 4 we have another significant swing low. So when I draw my Fibonacci retracements, do take note when we draw Fibonacci retracements, is always from left to right. be it for a downturn or upturn. So do take note. So when it's in a downturn, when price is moving down, we're going to be starting point is going to be on the top left, end point is going to be on the top right. So we're always going to go from top left to bottom right. For an uptrend, when price is moving up, right, we will also draw from left to right, but in this case it will be from bottom left to top right. Okay, so do take note. The Fibonacci retracement tool, whenever we use it, we're going to know. All right, okay, all right. There's a question from Zoran as well. All right, okay. Oops. So okay, so this is what this GIF is trying to explain, right? So whenever we draw Fibonacci retracements, we always go from left to right for an uptrend, and we go from bottom left to top right for an uptrend, and for the downtrend we go from top left to bottom right. Now, yes, Zoran, is a very good question. What is which swing is significant and which is not? So another thing I want to highlight is as well, whenever we use Fibonacci retracements, it should be on the H1 time frame and above, right? So we should be looking at least the 1 hour time frames before we do our analysis using any Fibonacci tools. Okay, so do take note, Fibonacci retracement tools, projections, expansions, they work much better on the higher time frame. So that typically means H1 and above, because when you look at the market structure on these time frames, H1 and above, there's less noise, right? So when there's less noise, we are able to identify significant swings such as these that have been described here in this GIF. Of course, we're going to go into trading view, and I'll give you a good live example of how we can identify significant swings in current market conditions as well. All right, so now take note that in this GIF we can see that this is a significant swing high at 0.1, another significant swing high at 0.3, and we have significant swing lows at 0.2 and 0.4. So just to repeat, Fibonacci retracement always goes from left to right. So for a downturn, we'll start from top left and then bottom right, and for the upturn, we're going to start from bottom left and end at the top right. All right, okay, now we have to follow the market structure, right? So now that we've identified what are the significant swings, and we also have taken note that Fibonacci retracement tools or projection tools, they work better on the H1 time frame and above, simply because there's a lot less noise in the market structure. When there's less noise in the market structure, we're able to identify the significant swing highs and the significant swing lows. Right, so now we have to follow the market structure. What do we mean by this? Right, in this example here, you can see the orange line highlighting the general trend of the move, right? You can see the price structure. Okay, let me just highlight it as points first so we know. Okay, this is 0.1, 0.2, 0.3, 0.4, right? So we can see that from 0.1 to 0.2, it is very clearly in an uptrend. From 0.2 to 0.3, very clearly in a downtrend. And of course, from 0.3 to 0.4 is very clearly in an uptrend. So what do we mean by follow the market structure? Right, whenever we use the Fibonacci retracement tool, there's always a trend line, right? So if I go back to right, so if I okay, no, it's not in there, it's in this one now. So when you look at this GIF here, the starting point is from 0.1. They've started this retracement tool from 0.1 and they've ended it at 0.4. If you look at this diagonal blue line, right, this diagonal blue line here, right, once again, once it comes back on, we'll see this diagonal blue line stretching from 0.1 to 0.4. We can clearly see that this blue line here does not capture the market structure very well, right? We can see that yes, this 0.1 to 0.2 is an uptrend, but 0.2 to 0.3 price is actually pulling back quite strongly. So the trend line is not capturing the market structure very well. In this scenario, where would actually be a good starting and end point for the uptrend would be from 0.1 to 0.2. So in that scenario, we can imagine that the blue trend line here, or the diagonal trend line of the Fibonacci retracement tool, will capture the market structure very well. Similarly, for this downturn here from 0.2 to 0.3, when we start the Fibonacci retracement at 0.2 and we ended at 0.3, we are going to see that the trend line will capture the market structure very well. Of course, I'll show this example in the live charts as well, so it's much more clearer. Right, so in this example, on this slide, the GIF is clearly showing to us that the trend line of the Fibonacci retracement tool, we started the retracement from 0.1, we ended at 0.2. We can see that the diagonal blue line has captured the market structure pretty well, right? You can see that it's captured the market structure pretty well. Of course, not every move will have the trend line capturing the market structure perfectly, but in a sense, if you see in this example here, it has captured the move pretty well, and at the same time we can also clearly see that this is 0.1 is indeed a significant swing high, and 0.2 is also a significant swing low. So when that happens, all the subsequent retracement levels that we see are likely to offer significant resistance. So in the case of a downturn here, when we draw the Fibonacci retracement on the downturn from 0.1 to 0.2, the subsequent retracement levels are going to highlight potential resistance areas, right? So that's what it means for the downturn here. All right. Okay, now we'll look a little bit deeper into what are the Fibonacci retracement levels, which are the key retracement levels that we should look out for. All right, so the retracement levels are the values that are between 0 and 100%. So that means the key levels are at 23%, 38.2%, sorry, 23.6%, 38.2%, 50%, 61.8%, and 78.6%. So these are the key retracement levels for the Fibonacci retracements, right? So these are the key retracement levels here. Okay, so do take note for Fibonacci retracement, these are the key levels, and Fibonacci retracement levels lie between 0 and 100%. We also mentioned at the start, we're going to be looking at Fibonacci expansion levels. So these are the negative values, negative levels. The key negative levels for Fibonacci expansion lie at negative 27.2% and at negative 61.8%. We also talked about Fibonacci extension levels, and the key and extension levels are levels that are greater than 100%. So the key levels lie at 137.2% as well as at 161.8%. Right, so we can see here when we've drawn the trend line from 0.1 to 0.2, these retracement levels from 23.6, 38.2, 50%, 61.8, and 78.6%, these retracement levels here are going to be potentially highlighting resistance levels. Now I say potential because it doesn't mean every retracement level is going to offer significant resistance as price starts to move up. In this example here, we can clearly see the retracement level at 23.6% did not offer any resistance at all. Neither did the resistance retracement level at 38.2%. Where price did finally run into resistance appears to be at the 50% Fibonacci retracement. So do take note that these retracement levels only offer potential resistance, right? They help to highlight potential resistance zones. It doesn't mean that price is definitely going to stall around this level at each subsequent level, right? And we'll see that in the live charts as well. So over here, this is another illustration of all the Fibonacci levels. We have the retracement levels that lie from 23% all the way to 78.6%. We have the extension levels, which are levels greater than 100%. We have an example of the 127.2% here. And we have the expansion levels, which are the negative Fibonacci retracement levels, of which the key levels are negative 27.2 and negative 61.8%. Alright, so in this scenario here, we can see we've drawn the retracement on this downturn here, on this downtrend. So we started from 0.1, which is the starting point, and we've ended at the ending point, 0.2. So we'll always go from top left to bottom right for downturn. Right, now here this is a chart of the dollar index. I'm on the daily time frame here. Like I said, we can use this Fibonacci retracement tools, projection, expansions, anywhere from H1 time frame and upwards. But just for clear illustration, I'm just going to use the daily time frame. So as you can see, when we use a higher time frame, such as H1, H4 and above, there typically is less noise in the market structure. So when there's less noise in the market structure, we are able to it makes it easier for us to identify significant swing highs and swing lows. So before going into the retracement levels, I'm just going to highlight how much easier it is to identify the significant swing highs and swing lows. Right? If we look over here at point 1, right, we can quite clearly see this price has made a significant swing high over here, and after price has made this swing here, right, on the second or third candle, we also know that this was the low here. So that means we would start our Fibonacci retracement from point 0 over here and will end it at point 1. So all the subsequent retracement levels that come up would be levels that would highlight potential support areas. Alright, so this is what we mean by significant swing lows. Over here, this is a potential significant swing low, or not potential, it is a significant swing low. This is a swing high. This is also another swing high resistance. This is very clearly a swing low support. Similarly here, this is also very clearly a swing low support. This is also another swing high. And this is, you can see, is one big swing high resistance here as well, right? So these are the type of significant swing highs and swing lows that we're trying to identify, and it's actually much easier to identify such swings when we use the H1 time frame and above. All right. Okay, now going back to this to this slide here. So we've drawn a Fibonacci retracement here for an uptrend, right? So once price has formed this bottom here, it goes to the top, and as you can see, after the second or third, fourth candle, there's no new high being made. So we know that this is the absolute high here, this is the absolute low. So that means we're going to start our retracement from point 1 here, right, from the absolute low, and we're going to end it on point 2. So you can see clearly we're going from bottom left to top right, right, bottom left to top right. That's how we always draw the Fibonacci retracement. And in here we can also see that the trend line of the Fibonacci retracement tool, which is this blue diagonal line, has captured the market structure very well, right? We can see that price has not deviated significantly away from the trend line, be it to the upside or to the downside. You can see quite well how the trend line has captured the market structure. So this means that we've drawn the Fibonacci retracement from the most ideal starting point to the most ideal end point. Now, as I mentioned, the retracement levels here, in this case of an uptrend, these retracement levels here are going to help us identify potential support levels. Once again, these are potential support levels. It doesn't mean that all these retracement levels are going to offer significant support, right? In this example here, so after price made this high, I believe in early October for the dollar index, right, we can see as price retreated, it found support not once but twice at the 23.6% Fibonacci retracement, right? So on the third and second and third candle, after the second and third candle has played out, perhaps we have taken the view that I would like to go short on the dollar index, right? Since I know this is the high here, the absolute high, I would place my stop loss at slightly above the significant swing high at 0.2. And then how would I identify a potential take profit level? Where I can identify a potential take profit level would be by using the 23.6% Fibonacci retracement, right? So as price drops lower towards this retracement level at 105.51, I would probably set my TP take profit level to take profit to a level that's slightly above the 23.6% Fibonacci retracement, right? So on the short side, we would like to place the TP just slightly above the retracement level so as to increase the probability of a profitable trade. So you can see price bounced off the support at 23.6% not once but twice before finally giving way here in early November. right? So this is how we can use the Fibonacci retracement in the example of identifying a potential take profit level for the short side after price has made this significant swing high here, right? So we can see at 23.6%, this level offered support twice before finally giving way. 38.2%, not very good, right? You can see that this big candle here actually smashed through or smashed below the 38.2% Fibonacci retracements. I would say this level did not offer much support. Where you can argue it found decent support would be this candle here at the 50%, right? Price did find pretty decent support here. Of course, we have the wick going below it, but then over the next 2 to 3 days, you can see price retracing a little higher before finally giving way. Similarly, at the 61.8% Fibonacci retracement level, we see price finding strong support here as well before making a much stronger move to the upside. Right, so similarly, as the downturn is clear, right, we see the dollar index exhibiting a bearish momentum, right? We can use the Fibonacci retracement levels here to identify potential take profit levels for any potential short trades, right? So that's how we can use these levels here. And then finally, the last significant level is at 78.6%. This, you can see clearly, did not offer any resistance, or sorry, any support at all. You can see this candle here broke underneath 78.6% quite clearly, and even the second candle after went even lower before finally retracing. So you can see that 78.6 did not offer any significant support. 61 was a good support level. 50, not too bad. 38, probably not too good. 23 worked very well for the first 2 times before price finally gave way, right? So this is an example of how we can draw the Fibonacci retracement for an upturn, going from point 1 to point 2. So we go from bottom left to top right, and the subsequent retracement levels will be helping us to identify potential support zones. Okay, right, now we should look at an example for the downtrend. Right, in this example here, we started this, it's basically the same chart but on a different date, right? So we started the starting point from early October, which is this swing high here, and we ended at this significant swing low, which is 0.2, which was right at the end of December, right? So similarly here, we can clearly see we are drawing the Fibonacci retracement from top left going to bottom right. So it's always left to right, whether it's up or down, but the Fibonacci retracement tool always starts from the left. Okay, so in this scenario here, after price has found this strong support at about 100.60 and is starting to make its way up, the subsequent retracement levels here, 23, 38, 50, 61 and 78, are going to identify potential resistance areas, right? Okay, all right, okay. So they're going to help us identify potential resistance areas. But clearly, you can see that for 23.6%, price actually smashed through it quite easily, right? Its price smashed through the 23.6% retracement quite easily, and then it actually started to use the retracement as a support. And then even 38, we can see, because there was such a strong reversal in the sentiment and momentum for the dollar index. We saw very strong bullish momentum since the beginning of this year, and once again, as price rose up towards the 38.2% Fibonacci retracement, it didn't offer resistance. It actually broke above it, and then similarly for the 50% as well, where we can sort of argue where it did seems to have run into a little bit of resistance is around the 61.8% Fibonacci retracement. Right here, so far we can see that price has failed to break above it so far. Or well, you can even argue here, the first time 50% price came relatively close to the 50% retracement level before staying underneath it, and then before moving higher. Then you can see at each time as it's gone above the retracement level, that retracement level has proceeded to act as a support. But this doesn't mean that's going to happen all the time. It just so happened that has been the case in this current example here. Right, so the next retracement level that is going to identify a potential resistance is going to be at the 78.6. So should price break above the 61.8% Fibonacci retracement level, there's also another overlap level here. We can see price finding support here, running into resistance here, creating an overlap resistance level which aligns very well with the 78.6% Fibonacci retracement. Right, so this is what we have, or this is how we draw the Fibonacci retracement tool for a downtrend. Alright, if there are no further questions for Fibonacci retracements, I'm going to move on to the next section. Right, are there any questions for retracements? Alright, if there are no questions for retracements, then I'll move on to the next section. Alright, great. Alright, now we're going to look at extensions, Fibonacci extension levels, and why we call it a Nike tick. Right, so in this GIF here, we're going to draw, okay, to find the Fibonacci extensions, we're still going to use the same tool. It's still the same Fibonacci retracement tool. So we're going to start from point 1, and we're going to end at point 2. But this time we're going to look at the extension levels, and as we mentioned earlier, the key extension levels lie at 127.2% and 161.8%. Right, now how can we use this Fibonacci extension levels? Right, let the GIF play out. So as price has made this low here and is continuing to rise higher, perhaps we have come to the conclusion, or our analysis points to a potential bullish breakout. Right, if you have a potential bullish breakout at this swing high here, we can use the extension levels at 127 and 161% to help us identify potential take profit levels. Right, so there's one way to use the extension levels. As price breaks out of that swing high resistance at point 1, we can use the Fibonacci extension levels at 127% and 161% to help us identify potential take profit levels for the long trade. Similarly, as price stalls around 161.8% Fibonacci retracement, as in the case in this GIF, it also helps us to identify a potential short entry as well. Right, so once you see the swing high here and you see the next 2 or 3 candles, we can initiate a sell entry, and we can also put our stop loss as slightly above that wick. So you can see how the Fibonacci extension can be used in both ways. Right, in the first case, for this downturn here, we're using it to identify potential take profit levels for potential bullish breakout, and then once price gets exhausted around the 161.8% extension, we are using that to help us identify a potential short entry, as well as identifying a suitable stop loss level above the top of the wick here. Alright, right, so here in this static picture here, maybe this is a little bit more easier to comprehend why we call it the Nike tick. Right, so in the case of a downturn, when we draw the Fibonacci retracement from point 1 and we end at point 2, top left to bottom right, you can see the market structure exhibiting the Nike tick. Right, you can see that this is very clearly a Nike tick here. Right, so as price has made this significant swing low here, it's coming to rise higher. Maybe we have some fundamental data news release, or we have other technical analysis indicators that we have used to identify a potential bullish breakout. So if we identify this current market structure as a potential bullish breakout, where would we identify our take profit levels? Well, of course, we can use the Fibonacci extension levels at 127% and 161%. Right, and then as price stalls or gets exhausted around the 161.8% Fibonacci extension level, we can then use the extension level to help us identify a suitable short entry as well. So we're looking for the reversal. So we can see that this is the absolute high. We will place a suitable stop loss above the absolute high here. So this could be anything between 10 to 15 pips above this high, and then we can initiate a short entry here and for the reversal. Right, so this is how we can use the Fibonacci extension tool to help us identify potential take profit levels for the long position as it makes this bullish breakout here. Similarly, as price reverses off the 161.8% Fibonacci extension, right, it also helps us to identify a potential reversal in price action, and also helps us identify a potential short entry as well. Right, and in this graphic here, we can see quite clearly why we also call the Fibonacci extensions the Nike tick. Right, okay, similarly here, okay, so this one here is I've used once again the dollar index chart. I'm on the daily time frame, so I've started my retracement from point 1, which is here, and I've ended my retracement at point 2, which is the swing low here. Right, so you can see the 127% extension and 161.8% Fibonacci extension levels lie at these respective places. So once again, we can assume that we are looking for a potential bullish breakout, right, as price has made this significant swing low bounce of 99.58 and is rising quite strongly. We have identified this previous swing high resistance point 1 as a potential bullish breakout area, so we're looking to go long. So we can identify the first TP at 127% extension, second TP at 161, but in this case we can see quite clearly price actually stalled underneath the 161.8% Fibonacci extension. So this just shows you that, right, price is not always going to reach the respective Fibonacci levels, right? In theory it should reach it, but in practice we all know that's not usually the case. It can come very close to it, or it can even in some cases go past it. But in this example here for the dollar index chart, you can see quite clearly it actually failed to reach the 161%. Price actually ran out of steam at around 107.40, I believe, before dropping lower. So because we know price has failed to reach 161% extension and also has failed to break above 107.40, right, then it also helps us identify a potential reversal for the dollar index, right? So as price then starts to reverse quite strongly, we can see here this is a very strong upturn or uptrend, and we can see now price is also trading very strongly downwards here, right? So do take note for the Nike tick here. You can see the very clear Nike tick market structure, right? So this is for the downturn. We use the Fibonacci retracement tool starting from point 1. We end at point 2, going from top left to bottom right, and then we are looking for Nike tick market structure so that we can use the Fibonacci extension levels to help us identify potential take profit zones for the bullish breakout that has occurred at swing high resistance 1. Now for the other case, this is an inverse Nike tick, right? So in this scenario here, for the inverse Nike tick, I'll just show you. You can see the market structure here. This is an inverse Nike tick, right? It's basically the opposite of the regular Nike tick. Right, so here we've drawn the retracement. We're using the Fibonacci retracement tool once again. We are starting this retracement from point 1, which is the swing low here, and we're ending it at point 2, which is the swing high here. So we go from bottom left to top right, and as price is falling down, perhaps we have come to the conclusion here that we're looking for potential bearish breakout, right? We're looking for potential bearish breakout. Where would we identify potential take profit for the short selling idea? You will identify we will use the 127% extension as TP1, and should price continue to drop lower, we will use 161% as the second take profit level. But in this case, we can see here price actually found strong support at the 127% Fibonacci extension level. This was back in mid-July of 2023. So when price came crashing down quite strongly for the dollar index, it broke underneath 100.70, triggering bearish breakout, and by using the 127% Fibonacci extension, we have identified a suitable take profit zone for this short trade idea, right? So this is how we can use the Fibonacci extension, the Nike tick, for both sides of the move, right? So this was for an uptrend here, and in the previous slide we did the Fibonacci Nike tick or extension for the downtrend, right? So when we draw the Fibonacci retracement for a downtrend, the extension levels are going to help us to identify potential resistance areas or take profit areas for the upside. And when we draw the Fibonacci retracement for an uptrend like this, the subsequent extension levels are going to help us identify support areas or potential take profit areas for the short trade ideas. All right, okay. Okay, next we're going to look at Fibonacci expansion levels. and why we call this the flash. Okay, so here Fibonacci expansion levels are simply levels that are less than 100%, right? They are the negative expansion levels, and the key expansion levels lie at negative 27.2% and negative 61.8%. All right, hi Ajay. Okay, for time frame, as I mentioned, because we are trying to identify significant swing highs and swing lows, when we use the time frame of H1 and above, or 1 hour time frame and above, it usually helps to filter out a lot of the noise. So that's when the Fibonacci tools or the Fibonacci levels would work much better, right? So when we have less noise in the market structure and we're able to identify significant swing highs and swing lows, then we will potentially get Fibonacci levels that will offer quite significance in terms of resistance and support. So generally this works for time frames from the 1 hour time frame and above. All right, so 1 hour time frame and above would be more suitable to use the Fibonacci tools. Okay, so now we're going to be looking at expansion. So once again, for expansion, we're also going to be using the same Fibonacci retracement tool that involves 2 points. We will start our starting point here at point 1 and end at point 2. So we'll go from bottom left to top right. Now for Fibonacci expansion, because this starting point here is 100%, the ending point here is 0%, the expansion levels, which I mentioned are the negative levels, are going to lie above the swing high at point 2. And do take note that these levels only are valid, or we can only use the Fibonacci expansion level when this criteria is satisfied. That means we must see price retrace at least 50% from the swing high at point 2. If price does not retrace 50% from the swing high at point 2, that means these expansion levels are typically not valid. So where is the 50% here? So you can see this is 50%, this is 61%. So as price is retracing lower, price must reach at least the 50% retracement level before reversing to go higher. And then as it comes up, then the negative levels or the expansion levels are valid. If price reverses around the 38.2% retracement or 23 or anywhere above the 50%, then typically these expansion levels are not valid, right? It will be much easier to visualize on this static chart. So in this case, we're drawing the retracement from point 1 to point 2. You can see 50% here, 61% is here. So as price retraces higher, we can see it has retraced up to 50% here, then also up to 61%. So it has to satisfy at least 50% retracement. Then as price returns to drop lower, then these levels here, expansion levels at negative 37.2 and negative 61.8% are valid. Right now, how can we use this level here? So once again, we can use this expansion level to help us identify potential take profit for the short trade. So as price is falling lower, we have come to the conclusion that point 2 is a potential bearish breakout opportunity here. So if we enter short at point 2, where would we identify a potential take profit zone? It would be at the negative 27.2% Fibonacci expansion, right? So you can see quite clearly here, price is falling down quite strongly. It breaks through this swing low support at point 2, triggering a potential bearish breakout. And because we have seen that price has satisfied, or the retracement has satisfied the 50% mark here, then these expansion levels are valid. So we can then use negative 27.2% Fibonacci expansion to help us identify a potential take profit level here. Now typically, if price does not continue to drop lower and it reverses from the negative 27.2%, price typically returns to the breakout level here, which is at point 2. All right, so do take note of that. Of course, this doesn't mean it's going to happen every single time, but typically this is what usually happens, right? Now, okay, so I've tried to find examples on TradingView. So once again, I'm using the dollar index chart. I'm on the daily time frame. So in this case here, I've started my retracement from point 1, which is this high over here. I've ended my retracement at point 2. So bottom left, top left to bottom right, and we can see price has also retraced up to the 50% retracement. So when price retraces up to this point here and then reverses to drop lower, then my subsequent expansion levels at negative 27.2% and at negative 61.8% become valid. So as price drops lower sharply or strongly, we can identify a potential bearish breakout. So we enter a short position here. We can identify negative 27.2 as the first take profit level, and should price continue to drop lower, then we can identify the second take profit level as negative 61.8%, right? So we can see how we have used the Fibonacci expansion levels to help us identify potential take profit zones for the potential bearish breakout over here, right? Similarly, in this example here, we're going to be using the Fibonacci expansion levels to help us identify potential take profit for the long ideas. So we have started the retracement here from point 1, this swing low. We've ended the retracement at point 2, this swing high. Once again, we can see after making this swing high at point 2, price pulls back and it drops all the way down to the 50% Fibonacci retracement. So when that happens and price starts to move higher again, these subsequent levels at negative 27.2% and negative 61.8% are now valid. So as price is rising higher, we identify a potential bullish breakout at point 2, the significant swing high resistance point 2. We identify a potential bullish breakout. We'll identify our first TP at negative 27.2%, and then we'll identify our second take profit zone at negative 61.8%, which is where price has run into resistance and started to pull back quite strongly, right? So you can see how in this scenario as well, you can use the Fibonacci expansion levels to help us identify potential take profit for the potential bullish breakout. Similarly, when price gets exhausted at negative 61.8%, it starts to reverse to drop lower. It's also helping us to identify a potential short entry as well. Alright, okay, now we've come to the final section where we're going to be looking at Fibonacci projections and Confluence. So Fibonacci projections is the one where we use a different tool. So in TradingView, it will be called an extension tool. So when we use the Fibonacci projection, it actually involves 3 points. So we'll have a starting point, we'll have the middle point, and we have the end point, right? So in Fibonacci projection, the key levels that we're looking for are 61.8, 78.6, and 100%. We can use the other levels as well that are greater than 100%, but typically the more significant levels for Fibonacci projection lie at 61.8, 78.6, and 100%. Right? Okay, so in this scenario here, we can see price making a significant swing high at point 1, a significant swing low at point 2, and then another significant swing high at point 3. So as price is starting to fall lower, we're going to use the Fibonacci projection to help us identify potential support areas. So we start at point 1, go to point 2, and at point 3. So at this point here, say we have opened a short position here because price has made this significant swing high and is starting to drop lower. How would we identify our potential take profit for the short trade? We'll be going to be using the Fibonacci projection levels at 61, 78, and 100%. Right, so we'll go on and see in this GIF here. So remember, Fibonacci projection uses the extension tool that involves 3 points. So we start at point 1, going down to point 2, and it end at point 3. So you can see the key projection levels lie at 61.8%, 78.6%, and 100%. So should we have a short trade after price has made this significant swing high here and start to drop lower, we are going to use the 61.8%, 78.6%, and 100% projection levels to help us identify potential take profit levels. And in this GIF here is actually showing us how we're going to use the expansion level as well as the projection level, extension level. So this is a bit messy here. We're going to get to that in a little bit, but if there's any, this will be a bit more clearer here, right? So once again, we're going to use a Fibonacci projection for the uptrend. So in this scenario here, we have point 1, which is the swing low over here. We have point 2, which is the middle point, the swing high resistance here, and then we have this little pullback swing low support at 0.3. So what we are using is the Fibonacci extension tool. So we'll start at 0.1, going up to 0.2 and ending at 0.3. So as price is rising up here, right, and it's breaking above 0.2, we're going to use the projection levels at 61, 78 and 100% to help us identify potential take profit zones, right? So as price starts to go higher, we can see that clearly in August this has been a strong uptrend for the dollar index. There's a pretty decent pullback, but price finds support at about 103 before rebounding to go higher. So as price is rebounding higher, we use the Fibonacci projection tool, 1, 2, 3, using 3 points, and then we're going to use the 61.8%, 78.6% and 100% to identify potential take profit zones for the continuation of the uptrend. So we can identify the first take profit zone at TP1, right, price clearly breaking through this, and then second TP2, take profit zone 2 at 78.6%. but in this scenario we can see that price does not reach the 100% projection. Price actually stalls around 107.40 and then proceeds to drop lower here, right? So we can see how we can use the projection tool on the uptrend to help us identify potential take profit levels, or in other words, help us to identify potential resistance levels. Now for the downturn, this is another one for the uptrend, sorry. So this was in okay, this one was, I believe, 2023. I believe this was 2023. Yeah, this was 2023 August to October, and this one is on 2022 August to October. So this is 2022. So in this chart, I'm starting my projection at 0.1, going up to 0.2 here, and ending at 0.3. 1, 2, 3. So as price is making its way higher here, right, I've identified a potential bullish breakout area. Where would I identify my TP? I would identify my TP at the respective Fibonacci projections level. So TP1 at 61.8%, TP2 at 78.6%, and of course TP3 at 100%. So in this scenario here, back in 2022, we can see the projection tool price actually reached all the way up to the 100% Fibonacci projection before stalling at about 114.40, perhaps 114.80, before reversing to drop lower, right? So this is how we can use the Fibonacci projection tool for the uptrend. Now for the downtrend here, this is in the end of 2023, right? We started our extension from 0.1, going down to 0.2. Price retraces a little bit higher, so we ended 0.3 here. So as price is falling lower here, right, we have drawn our projection 1, 2, 3. So as price is dropping lower, we open a short entry position. We feel that the downturn is still intact. We open a short entry position. We will then use the Fibonacci projection levels, right, at 61%, 78.6% and 100% to help us identify our take profit level. So you can see here price dropped down to TP1, 61.8% Fibonacci projection level, before retracing a little higher. Then as it broke through it, it reached all the way to 78.6%, another potential take profit zone. And then when price continued to drop lower again, it found support here at exactly the 100% Fibonacci projection level before retracing to start this strong bullish move for 2024, right? So this is how we can also use the Fibonacci projection on the downtrend. All right, now what is Fibonacci confluence? Okay, do not be confused by this term called confluence. It simply means that we have more than one Fibonacci level at that particular price point or that particular price zone, right? This could be a Fibonacci retracement level, it could be a Fibonacci extension level, expansion, or projection level, right? So basically Fibonacci confluence simply means we have more than one Fibonacci level at that particular price point or price zone, right? So this graph here is going to explain how we're using Fibonacci confluence to help us identify a very strong support zone, right? Okay, so here we have used the Fibonacci expansion, right? Negative, sorry, this should be, okay, this red is expansion, gray is extension, And all right, okay, so here we have, and this one, this is for the black, should be projection, sorry, this should be 78.6% projection. Oh, just give me a minute, sorry, I'll just be right back. Right, apologies here, I just had a very bad sneeze just now. Alright, okay, so alright, we're back to Confluence, right? So how we're going to use various Fibonacci levels to help us identify a strong confluence area. So that means we have more than one Fibonacci level at that particular price zone. So in this example, we have the expansion level here. So that means we are using the Fibonacci retracement tool from point 1 to point 2, and then price has to retrace 50% higher, so we do see the 50% here, right? For example, 50% is here, so when price makes this 50%, it starts to retrace lower. We can then use the negative 37.2%, so the negative 37.2% expansion level is valid. So this is using the Fibonacci expansion. Now we're using the Fibonacci extension. So this extension starts from here, point 2, ending at point 3, right? So as price is dropping lower, we're using the 161.8% Fibonacci extension level. We can see that it also aligns quite well with the expansion level. And finally, we're using the Fibonacci projection, right? This is the projection, which was the last topic that we mentioned. So projection involves 3 points. So in this case, it's starting from point 1 to point 2 and ending at point 3, and as price is dropping lower. In this example, we can see the 78.6% Fibonacci projection also aligns very close to where the extension is and where the expansion is. So this creates a very strong support zone. So we call this a strong Fibonacci confluence area. Of course, it doesn't mean that every market structure will have the expansion, retrace, extension, and projection. Sometimes you don't even get any confluence areas at all, right? It could just simply be a retracement level or an extension level, or sometimes you can get, or there will be instances where we can get a combination of expansion, extension, or expansion and retracement, and so on and so forth. So do take note, a scenario like what is being explained here is not likely to occur very regularly in real life markets, but it's just an example to show you how we can use the expansion, extension, and projection to highlight a significant support area. Right, so here we can use, once we have identified a very strong support area based on Fibonacci confluence, similarly as price is falling lower, we're going to use this confluence area to identify our TP level, right? And of course, when price finds support here and starts to go higher, it also helps us identify a potential long entry, and we would place the stop loss at slightly below this strong support area, right? So we have an opportunity to identify a potential take profit zone for the short sell idea, and as price finds support within the confluence area and starts to bounce off, we have also identified a potential long entry, and with identifying a suitable stop loss just underneath the extension level. All right, okay, we've come towards the end of today's webinar. If there's any questions, please do let me know now. I'll be more than happy to go through any queries that you may have. Otherwise, we'll just wrap up with the ending disclaimer. Alright, so do take note of the risk warning that comes with trading Forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Alright, okay, so if there are no questions or any queries, then yes, thank you for tuning in into this Fibonacci Masterclass webinar. I hope this has been a great session for all of you. And do take note, if you have missed the earlier part or the first half of this webinar series, do take note, it will be uploaded onto IC Global Markets YouTube page, where you can catch it in full at your own discretion. Alright, okay, thank you everyone for tuning in to today's webinar, and I look forward to seeing all of you at the next one. Alright, take care and have a great trading week. Alright, thanks Ajay, thanks Desiree, alright, thanks Zoran as well, and Broker GTS. Alright, thank you everyone, take care, have a great trading week.